for joining us. We always like to start these out where you introduce yourself. It's funny because I was like, you know what? I can't say Popcorn Finance Podcast too many times because I feel like it's going to be like a tongue twister somewhere up in there. So let me not do it too many times. But yeah, please introduce yourself and what you do.
Yeah, of course. Thanks for having me on, first of all. Appreciate it. Excited to get to talk with you here for a bit. And I host a podcast called Popcorn Finance. It's a short form podcast where I discuss finance in about the time it takes to make a bag of popcorn. So the episodes are pretty short. Try to keep them under 10 minutes. My brother says that's still burning popcorn, but I say, don't worry about that. It's multiple bags I'm cooking in succession. That's what's going on. But it's just a general finance show where I cover everything from paying down debt, investing, saving, retirement, all those things. But the whole point of me making the show and making it short was to make something that was approachable and easy for people to understand. And my whole goal is to help people kind of get away from the fear that we all have around money. And I try to do that by using very simple, easy to use terms, breaking down all the jargon that's usually thrown out there that makes it so scary and so confusing. And I try to do that all in a short amount of time. So that way people can pick it up, when they're going to work or going for a walk or just, hanging out on the couch, whatever they may be doing. It's something that you can easily pick up and it won't, take all day to get through an episode.
Got it. I think especially like with millennials, we like everything short and sweet.
Oh yeah.
If it's too long, it's like I will be honest, I'm guilty if like I pull up like a video and if it's like 15 minutes, I'm just like, yeah.
The funny thing, my friend just sent me a video I shouldn't say just sent me a video 3 months ago and it was like 13 minutes. He was like, have you watched it? And I was like, man, that's 13 minutes. That's a long time. He's like, it's 13 minutes.
Right. So I'm like, no, 1 minute, 2 minutes. I'm like, I got it. But it's like 15 minutes. I'm just like, I'm going to think on it for a minute.
Yeah, it's a commitment.
So I do like the very quick, get information, keep it moving. You have a story where you talk about paying down your debt. It was actually the story that caught Nyla's attention, who reached out to you. Would you please tell us the story about you paying down your debt?
Oh, yeah. So my wife and I, when we got married, it was back in 2012. Going into that, the wedding planning and all that stuff, I had a little bit of debt, maybe like, I think $3,000 worth of debt, and that I managed to pay off. And so I was all excited. I had a little money saved. I used that to buy the ring, but then after that, I was broke. That was it. And so we started planning the wedding, and it's like this stuff was expensive, and even the stuff that we were trying to go cheap on still cost way too much money. And what ended up happening was the pressure of we have to have a wedding, and it needs to be this way. It looks like this, and we ended up spending, I think, around $14,000, which I think is not a lot compared to what some people spend on the wedding, but it was $14,000 of debt because we had no money to pay for any of this. And so it kind of snowballed from there. So we both, when we moved in together, I had lived with a friend. She was living with family. So we really didn't have any furniture. So we buy some furniture. Then we had some medical bills that popped up and then some school expenses. And so I think a couple years into our marriage, we were at about $27,000 in credit card debt. And we didn't realize it until one day I was like, I kind of knew. I was like, I know we're using this card a lot. And I was like, I really need to add this up. And I added it up and it was crazy. I was like, what are we going to do with this? At the time, I think combined, we were probably taking home somewhere around $45,000. And so it was like, that's more than half of what we're bringing home in the whole year. How are we supposed to pay this off? And that's kind of when I started to take it a little more serious. And it really started to weigh on me. And that's when we kind of started our journey to paying off him.
Was it one of those like, let's sit down and create a plan, or was it like you rolled over and was like, look, this is like not working. Like we got to like eat ham sandwiches for like a week. So like kind of talk me through that process of really sitting down and putting a plan together to become debt free.
Yeah. So when I realized it was just me kind of like, I'm going to go look at this because I kind of I have a background in finance. I went to school for finance. That's what my bachelor's degree is in. And my whole thing was I wanted to be a financial planner, but I graduated in the middle of the recession. So that's not what I was doing. I was doing some random accounting work. And so I was like, I should really be adding this up and making a spreadsheet. And so when I looked at it and realized where we were, that's when I went to my wife and I was like, we gotta do something. I'm like, did you realize that the number was this high? Because I didn't. And we got to make some changes. And so it really started with figuring out a budget. And it's like the most boring thing in the world to tell people to do. We started with making a budget, but we clearly hadn't had one. We were just like, money's coming into the bank account and then it's leaving over on this side, plus some in the credit cards. And so I sat down and I just looked at how much money were we making? What was our total we had to spend? And then what were all the things we had to keep paying for? So we had to keep paying for rent, we had a car payment, we had insurance, all those things that just had to happen. And then it was like, well, what do we have left? And that's what I used for the baseline to start all of this, to start our pay down. And I think at the time we we literally cut everything, like all the eating out, all the trips, all the stuff we were doing that we shouldn't have been doing. We literally just stripped it down to nothing. And I think we ended up saying we could have like $50 a month to do something, figure out something to do in that month. And I think we ended up with around $700 a month that was left over if we stopped doing all the other things we were doing and put that towards that. And that was the very beginning of our budget. And it didn't go well. I mean, that didn't happen the first 3 months, but it took time for us to kind of get to the point where, like, okay, we can do this and make that consistent payment.
I'm curious to know, what was the one thing you had to give up that you were not happy about giving up?
Oh, for me, it's food. Like anything with food, that's what I want to be a part of. That's what I want to do. That's what I want to be at. And that was a place where we were spending crazy money, like crazy. We were eating out all the time. 1 month, I added it up. 1 month, we spent over $1,000 on food between groceries and restaurants and, going to get coffee here and all that stuff. And it was just like, it was insane. And so that was the biggest cut that we made to our budget, was the food. And that was the part I enjoyed the most. And that's what we kind of did to hang out. That's why we spent so much money doing that, because that was our thing. That's what, on the weekends or sometimes on weeknights, that's where we would spend our time again. It was at a restaurant. And that was definitely the hardest part to cut out.
Gosh, I'm with you. I spend all my money on food.
Yeah, it's fun.
Pretty bad. When I think about it, like most of my money goes towards food. So I want to kind of shift to like what's going on right now with the pandemic. We at one time had 40 million people who were unemployed. I think we're supposedly down to like 30 now. People are really getting killed right now financially. However, there are some programs. So you see people like, hey, you can defer your house note, you can defer like this credit card payment, trying to, I guess, quote unquote, keep people from going so deep in debt. What is your advice to people who's trying to, at all costs, stay out of debt? But of course, it is so hard right now due to circumstances.
This is a situation that I don't think anyone was prepared for, could have predicted or expected what happened. This scale of economic, I guess, like force of just stuff shutting down and so many places closing, people losing their work. I don't think there's a situation that I can think of in the recent past where this many people have been affected. And when you're dealing with something on this scale, if you don't have a big like nest egg sitting there, if you don't have a huge emergency fund just waiting there, which a lot of people don't, I mean, understandable, because it's very difficult to do sometimes, you end up in a position where you need these programs, these bigger programs, to help keep things going and keep people from going into massive debt. Things were like the additional amount for unemployment that they were providing, and the student loan deferrals, and some people are able to get these stays on paying their rent to help them out because maybe they've lost all sorts of income, or they're one of those people who are waiting in that ridiculously long line to get any type of information about unemployment, which varies from state to state. So this is one of the situations where it's so difficult. But one thing I like to say is, don't get information from like friends and family or just random places like on social media where you haven't vetted it yourself. Because right now, I mean, all the time there's bad information floating around. But right now, when people are very vulnerable, you're finding a lot of bad information being spread around. So if you got that tip from a friend or a cousin who's like, oh, this is, just go here, call this number, or go to this program, like, double and triple check every piece of information you receive, especially when it comes to these programs, because you want to make sure that, one, you qualify for it, and two, that it is a real program. So going to your state's unemployment website and reading through the instructions, which are not always great, but going through those details, reading it for yourself, figuring out if you do have a student loan that does qualify for one of these programs where you can defer your student loan payments, things like that, and just being very cautious and aware of the information you're getting, and verifying it for yourself before you just assume that this is going to be something that'll be helpful for you.
Yeah, I Two things that pop up when you say that. I know with I can't remember which bank it was, but they were allowed you to defer your payments for your mortgage, but they want you to pay it all by like the end of like the third month or something like that. It was like a crazy thing. It was like, if I can't pay it this month, how am I gonna pay it all in a lump sum like at the end?
Exactly.
So there were definitely programs that it sounded really good, but as you mentioned, when you read the fine print, it wasn't as great of a deal as they tried to make it seem.
No.
So I want to ask, if there's three questions you get asked a lot about debt right now, especially with the pandemic, what would it be? What would those three questions be?
I would say right now, the three questions I'm hearing a lot are, one, should I save or pay down debt? That's like one of the biggest questions I'm hearing right now. The other one is, should I still be investing? And the other one is just a bunch of questions about the whole stimulus check and is another one coming, or how's the last one work? So I'd say those are the big three areas where I've gotten the most questions around.
Okay. Now the second part of that, we're going to jump into that. All right. So investing, what are your thoughts around investing right now?
I think where a lot of people get in trouble with investing is trying to figure out the best possible time to invest their money. It's like, I'm going to wait until this perfect moment and put my money in, and it's going to like triple and I'm going to be rich. You know, that's kind of like the idea where I'm going to pull it out now. I know now is the best time to pull out because the market's going to go down. I know it. And I'm going to put it back in once it gets to the bottom. Like, you know, people are trying to time the stock market to get the most bang for their investment, the bang for their buck. And the thing is, that's nearly impossible. Like if anyone could do that, they would be some of the wealthiest people and they would have no job because all they do is just throw a few dollars in and they'd be massively rich. The thing is, with me for investing, especially for most people, because a lot of us, we don't have time. I know I don't really have the time to sit there and I'm going to watch the stock market all day and read the perspectives and the SEC filings for all these companies to learn the ins and outs and why this would be a good investment. A lot of us don't have that time. So for me, what I tell people is your investing should be, one, boring. It should be one of the least exciting things you ever do. And it should be consistent, meaning that regardless of if the market is doing great or if it's doing horrible, you're putting in the same amount of money on a consistent basis. So that way, it's a process called dollar cost averaging, where you're putting your money in and on average, you're kind of getting different pieces of the market as it goes along. So sometimes it's up, sometimes it's down, but overall, you're kind of spreading your risk of market exposure and not throwing all of your money in at one time, just trying to guess the perfect time. You're saying, you know what? Sometimes I'm gonna come in at a bad time. Sometimes I'm gonna come in at a great time. But overall, I'm investing and I'm getting the average of what the stock market is doing at any given time. So that's what I say: is just be consistent and automated, and because that way you take all the emotion out of it. You're not sitting there trying to time it at 3:05 p.m. I need to hit the submit my transaction button. It's like, no, just have it automatically come out of your paycheck if you're contributing to like a 401k plan, or come out of your bank account if you're doing an IRA, so if your employer doesn't offer a retirement plan, and just let that automation carry you through and don't even worry about it. Don't look at it, don't touch it, just have a steady flow going into an account. And that's going to be the best way to do it, because you don't want to be stressed. I don't want to be thinking about my retirement plan all day. It's not fun.
Yeah, not fun. I'm with you. Actually, that was actually really great advice too. Thank you for that. Second one, and I did this one in reverse, even though you mentioned it first, because I think it is really interesting for the question, and I'm really interested to hear your answer on what do you tell people when they say, "Hey, I do have a little money right now. So are you paying down debt? You know, we don't know we have no clue what's going to happen next." At this point, we have no clue what's going to happen in the next hour. So should I be saving? Should I be paying down my debt? Like, for someone who's paid off debt, of course, but now we're in a pandemic. What is your advice when people ask that question?
No, for me, if you go back like 5-6 years, my answer would have been, oh no, you got to pay off that debt. But this is completely unprecedented time. This is like, no one saw this coming. And so because there's so much uncertainty, people don't necessarily know if their job will be there. Like you said, next week, next month, you don't know, because we have no idea where this pandemic is going. My focus for a lot of people is, you need to have something saved. You need to have something to carry you, because if you throw all your money into debt and then you lose your job tomorrow, you're going to have to go back into debt to keep yourself going because you don't have cash sitting anywhere else. And so under these circumstances, I would tell people that their focus should be on saving. I mean, you still want to make your minimum payments on your debt because you don't want to, have something go into delinquency and then they send it to collections or they ding your credit. So you don't want to have all those things happen. So you want to, one, if you have multiple credit cards, if you have student loans, you want to lay all that out and look and see what are my minimum payments. And so make sure you're budgeting. I'm making all of those minimum payments. Then after that, whatever money is left over, I'm throwing that into a savings account, putting it into an online savings account because typically you have a little bit higher, you have higher interest rates than what if you're going to like one of your physical banks where they're giving you, like 2 pennies for every like $1 million you put in. But I would do that and just not touch it because the typical guideline is to have anywhere from 4 to 6 months of your living expenses, your mandatory living expenses in an account that makes up your emergency fund. Because the idea is if you were to lose your job, it could take you, months, 6 months to find a new job. And you want to be able to stay afloat, stay in your home, be able to keep your car, be able to have food on the table in that process. Even now, people are even pushing out even farther. They're saying maybe you need 12 months of your expenses saved, which can be very difficult right now. And that's going to take time to build up that much money because it's going to be thousands of dollars. But if you're in this position where you're like, I got this debt, I'm really close to paying it off, I'm really focused on getting this paid off, but you don't have really anything saved, I'm telling people put that money into a savings account. And if you make it through this and you kept your job, you got a lot of money sitting there, and maybe you could take a portion of that and put it towards your debt. But I wouldn't do that before I know what's happening with all this stuff going on.
Totally agreed. I know we have some questions coming in. For everybody, if you want to ask a question, be sure to just drop it in. Usually about 5 to 10 minutes left, we will start asking questions. So I just want to throw that out there. Kind of stand on that same wave, but I want to go deeper into the emotion of debt. You talked a lot about the stress that comes with paying off debt, and that's enough. And now you're adding on top of pandemic, on top of that. Talk about some common advice you give though, because you've been through it also yourself, the stress and how to kind of deal with that when trying to go through that journey of paying off debt.
Yeah, it's when you're sitting in debt, it's one of the most, at least for me, it's one of the most stressful situations I've ever dealt with because especially depending on the number, it can feel like it's never going away. You're like, this is so big. I've never had this much cash in one time. How could I possibly pay this off? Or it's going to take me years, and that can weigh on you. And one of the things that I wish I could have gone back and done differently, because it took us a while, even though we only had, we had $27,000 worth of debt. It took us multiple years to pay that off. I believe it took us roughly 4-ish years, somewhere around that ballpark, 3.5 years to pay all that off. Because there's setbacks, new expenses come up, you don't plan for all these things. But it's so long and it's something that weighs on your mind so much that you can really start to beat yourself up and really start to sit in that and become depressed, become anxious. And I know I would be at work thinking about how can I make more money? I'm sitting there supposed to be doing my job that's paying me, but I'm stressed about they're not paying me enough. Where can I go to get more money? Or what side hustle can I do to bring in some more cash? And focusing on that all the time weighs on you so much that you have to have a release. You have to have an outlet. And one of the things I didn't do was I didn't tell anyone the situation we were dealing with. I mean, obviously my wife knew because it was, our money was together, but I didn't talk to anyone about it. Not my friends and my family. No one knew because I was afraid of what they were going to think about me. I thought they were going to, they're going to judge me. They're going to give me a hard time. They're going to say, how could you do this? All these things. And so I was like, why would I'm already stressed. Why do I want to have someone else kind of, get on me about this situation? But what I found was like right towards the end, it was maybe like 6 months before we paid everything off. I talked to one of my best friends about it and we were just talking and I don't even know how the topic came up, but I just kind of just said everything. Say, hey man, this is what we were dealing with and it's been for this long. And he's like, really? Like, I had no idea. I was like, yeah, I know because I didn't tell anybody. And it felt so good to sit and talk to him about that, even though like I didn't need I don't want him to give me any tips. I mean, what could he tell me other than just keep paying your payments? But it felt so good to be able to have someone to talk to about the situation and to just release and not have that bottled up because you can really get in your own head and you can really start to beat yourself up and it just becomes a vicious cycle. So for me, if you're dealing with stress, you got to find someone you trust because you can't tell this to everybody because people will say some stuff that'll make you mad and make it worse. But if you have a good friend, someone you can trust, family members, someone in your life. And if you don't, I'm a proponent of therapy as well. So if you have the opportunity to find some low cost therapy, someone you can speak to that so you're not on your own and dealing with this, with the weight of all this on your own shoulders, it's one of the best things you can do to help relieve some of that stress and kind of keep moving forward because it's a long journey.
Yeah. All right. So I'm going to ask one more question. Then we're going to get to the questions that are being asked. Once again, life happens. We, especially right now when none of us predicted what's going on now. But talking about now, but even outside of right now, life happens. But what advice would you give people to maybe avoid going to that cycle of getting into debt? And like I said, I know like off top, we're talking about, hey, don't go out there and get the car just because it looks nice. So there are some things I think that we all kind of know, but kind of walk us through, because you've been doing this for so long, walk us through some common things you see and how you would say, do X, and this will at least potentially stop you from going into cycles of debt.
Yeah, what I found is a lot of times people tend to generalize the financial issues and situations we all find ourselves in and what are our triggers. And it's different for everyone. Everyone is dealing with a very unique situation. Their family life, their work life, what they use to cope with different situations. So for me, it's about finding what it is that's causing you personally to go into that cycle. Because one person, it could be they don't make enough money. Like it's just their debt has gotten to a point where it's so high they don't have enough money to even maintain that payment to get that balance down. It's just going to keep growing or just kind of never go anywhere. Other people, they have bad habits. Like for me, I go out and spend $1,000 a month on food for no reason, and it wouldn't be good food, things like that. For other people, it's an emotional thing. When you're feeling bad, when something bad happens at work or in your life, you use money, use shopping, use the thing you can control to make yourself feel better. And so it's about finding out what makes you fall into this cycle of debt. And then once you know what it is that's bothering you, and that can take time. You have to sit and think about your own self and your own actions and your history and what you've been doing.
Be honest with yourself.
You got to be honest. You can't sit there and say, "Oh, I don't know why. I don't know why this is happening." If you sat and thought about it, you can understand what it is that's bothering you and what it is that's causing you to do this, and then address it from there. So if you're someone and I don't make enough money, whether it's my student loans or I have these credit cards or medical bills, whatever it is that is the source of your debt, you don't have enough money to cover that debt. And then when you're in situations like that, that's a difficult spot to be in because for you then have to now either say, I got to focus on finding a better paying job, which is difficult in the current environment. I need to find another source of revenue. Maybe that's doing some type of side hustle. Or maybe I know for me, one of the things I did was because we were making $45,000 in California, which is not enough money to do anything out here. And I would deliver food after work on the weekends. I would go and deliver food. That was a way to bring in some extra money. I also joined professional organizations. So I was an accountant. I was doing like payroll work. So I would join the organizations that would hold annual conferences, and I would be in charge of getting speakers, and I would network, and I would have these things to add to my resume. So that way I could then put myself out there and say, hey, I know I'm young. I know I have only been doing this for a couple of years, but I've done all these other things, and I've been proactive and use that as a way to get another job. So it's really about finding what it is that's causing your situation to be the way it is and what's causing you to go on that cycle of debt, and then attacking it from there and coming up with your plan.
Yeah, I think we're all trying to find our side hustles.
Yeah, exactly.
So let's jump into the questions. First question, do you feel sharing your salary with friends should be normalized?
Oh, this is a good one. I actually did a podcast episode not that long ago. The guest, she's anonymous. She was by Purple, it's Purple Life blog. And she was talking about how she, in her work environment, they started sharing their salary and how that opened up opportunities and let people know who was underpaid and who wasn't underpaid. And, big surprise, it was women of color who were the underpaid ones. And so because of that, they could go in. I mean, it didn't fix everything, but it let them know either I'm going to go talk to my boss or I'm going to go get another job. So I think there's definitely a benefit in talking about your salary, but at the same time, it can open up a whole other can of worms, and not everybody's ready to have that conversation. I'm pretty open because I talk about money all the time. So I've talked to my friends, a couple of my friends, and shared, hey, this is what I make. My family knows what I make. But I have had friends who they didn't know how much I made, obviously, before we started talking, and I tell them, and they kind of close up because I made more than they made, and so it may not be the best idea to just jump all the way into the conversation and say, hey, guess how much I make? How much do you make? People aren't always ready for that. But I think it starts by normalizing having money conversations. So start with something small. Like don't go all the way. Start with something small. Like, hey, I was trying to build a budget for the first time, and I'm spending this much on food. Or I'm spending this much on rent. What are you doing, or how much are you paying? Because I want to know if I'm doing this right. You got to start with those little conversations to kind of test the water, and then you can kind of judge how open that person is. And they may not ever be open. They may not ever want to have that conversation, and that's fine. But you may find some friends who are like, you know what? Maybe they start asking you some things, or maybe you kind of start to grow into that, that ability to have that conversation, because it is a skill to be able to talk about money and have these conversations without hurting people's feelings or making people feel like you're judging them or you're, trying to brag. So it takes practice, but then it's a skill to have these type of conversations. So just take some time and ease into it.
Yeah, we always say find ways to have uncomfortable conversations in comfortable settings.
Yes, I love that.
All right. So next question. What are your and Chris's feelings on trying to get out of medical debt? Can we talk to the hospital, or in general, like, what's your advice on medical debt?
Ooh, that one could be a tough one. I'll say, I'm always quick to say what I'm an expert on and what I'm not an expert on. For medical debt, that is not my specific wheelhouse, but some of the things that I've seen people do who are good at this is they'll make themselves a script. So the thing is, you don't want to hop on the phone with with the hospital or the doctor and just kind of ramble and not really have a game plan. So you want to have something, you want to know what you want to ask and what you're looking for. And the thing is, the worst they can do is say no. If you ask them and they're like, no, we can't do that, well, then you just move on. There's not much you can do if they're not willing to work with you, because it has to be a two-way street. You can't just say, I'm going to pay less and just say bye. You got to have them agree. But there's some people like, I have a co-host on another podcast. Her name is Alice, and she has a blog called Inspired Budget. She has like scripts on her site where she's like, okay, this is what I do. This is how I talk down the bills because one of her kids had an appendectomy. So the thing is, you want to have a game plan. You want to know what you're looking for, understand what you actually owe, and then just be open and have a conversation with them. And if you need help, seek out resources where people have, maybe some language that you can use in order to have the conversation. But things you just can't be afraid of a no. You just got to ask, and best case scenario, that you get a lower bill. Worst case scenario, you be stuck with it. But from what I've heard, people have pretty good success if you are open and you explain the situation with getting some help on those bills.
Nice. Great one. All right. So before we let you go, we always ask our guests to give us a hack. So we're going to ask you to give us a hack. It can be guessing it should be a debt hack, but if it's something else, we'll take it too, as long as it's a finance hack. So yes, leave us with a hack that we all can take advantage of.
Oh, this is a good one. I had two in mind. I was trying to narrow it down.
You can give us two. That's just like a bonus one.
Okay.
Like a one plus a bonus.
Okay, I'll give you these two. So this first one, this is a budgeting tip that I just learned that I wasn't even doing this in my own life. It comes from her name is Cyrenice Pierce. She has a blog and she has a video series called Poised Finance, and she has this method called the high five banking method. And I was like, that sounds interesting. And so what I've noticed is that there's a lot of tips on budgeting, but there's not a lot of tips on how to kind of structure your bank accounts. And her way is it is two bank accounts. One's for your bills, and then one's for everything else. And then you have 3 savings accounts. So, but what I'm focusing on is like the 2 checking accounts. And for me, what's brilliant about it is you're splitting your money apart and giving it a specific purpose. So in this case, you could have one for paying off your debt. You have a checking account where you put money every month, and this is where you're going to pay your debt from. You need to figure out how much your payments are going to be every month. So you got to do a little work to write that down. But you have a bank account where that money leaves your main checking account and it goes and it sits in another checking account that's only purpose is to pay your debt. So you automatically schedule your debt payments to come out. You automatically have your money get transferred to this other checking account. And that way it takes it completely out of your hands. Because for me, what would happen is all the money goes in the one checking account. I'm like, okay, I'm going to pay $700 this month on my debt. And then what do? I go out and I do something I wasn't supposed to do. I go out to this restaurant or I go to the movies and I'm like, well, it's not that bad. And the next thing I know, at the end of the month, I got $100 to make this $700 payment I was planning on doing. And so for me, it's all about separating your money. That way it's easy for you at a glance to be like, okay, I actually have this much money to do what I need to do. And then this much money is going to pay my debt. And you can prevent a lot of that overspending stuff that you fall into. That was my main tip that I was thinking about.
Okay. Now the bonus.
The bonus one. So this one I always say is a bonus because I'm always nervous about telling people this advice because I don't want people to get into more debt. But one of the things that I did when we had credit card debt, because it was spread, the $27,000 was spread over 3 credit cards. Because when one ran out, I would open another one to keep spending because that's what I did. It wasn't a great idea. And so credit cards have notoriously high interest rates. It's crazy high. It could be almost 30% in some cases. So what I did was I would set my payment structure and I was like, okay, which one of these cards has the highest interest rate? And then I would look online for a card with a 0% promotion. And then I would sign up for that one. And then I would do a balance transfer. And so it would cost me about 4 to 5% of that balance. But then I would make sure that I would pay that down quickly and it would save me, 25% interest for 12 to 18 months. And that's what I kind of did. As I was paying it down, I would move back large chunks to these 0% cards in order to save myself some interest because sometimes, the interest you're paying is almost as much as the payment you made. And so that's what I was doing to accelerate it. But the thing is, you have to be very diligent because if you do not either pay that balance off or move it somewhere else, they can hit you with a huge interest charge at the end of that. So you have to be very careful. And I only recommend this if you are going to be very disciplined because it's very easy to open a card and then now use that other card that's freed up to go and continue spending. So that's with an asterisk. That's what I did, but you have to be very, very cautious when you're doing something like that.
Yeah, I see a lot of people recommend the moving it, transferring it to a 0%. But like you said, most time it's only like that for 12 to 18 months.
Yeah.
So if you're not going to be able to pay it off for 12 to 18 months, it's probably not going to be very pretty at the at the end of it. And also it looks even worse when you have a card then that has like, $5,000 just happen to be sitting over there that's available to go be swiped somewhere.
Exactly.
So you definitely have to be disciplined. Chris, thank you so much for your time. Much, much, much appreciated. Tell everyone how they can find you, how they can follow you personally and for your podcast.
Yeah. So you can come find me over at Popcorn Finance Podcast. That's my handle on Instagram. Popcorn Finance anywhere you listen to podcasts. So, Apple Podcasts, Spotify, Stitcher, all those places. Just type in Popcorn Finance and you'll find me there. And I'm always open to questions. So if you want to DM me with a question you might have on personal finance topics, please feel free to send it over.
All right. Once again, thank you so much for your time. This has been great. We're going to share some of your top quotes and hacks through CapWay. But yeah, once again, thank you so much for everyone who joined us. Thank you so much for joining again. And we will see you next week. You guys have a great one.
Yeah, thanks for having me. It's great joining you.